It's important to understand that regardless of if you're trying to get rich quick, working towards retirement, you're working towards financial freedom, or you want to be a developer, that we're all working towards the same thing. And that is, I believe, choices in our life and financial freedom so that we can be the best version of ourselves. I was riding to work this morning and I was thinking about my personal investment strategy, and something that often isn't talked about in this space is actually what type of property investor are you and what type of investment strategy do you want to have. So in today's video, I'm going to talk about the 4 different types of investors, and I think they are so distinct with different characteristics, different personalities, different aspirations, different goals. And the sooner you can figure out who you want to be and what your plan is, the sooner you can get that holy grail of choices in your life, of financial freedom in your life. My name's Ben Everingham. I'm the director here at Pumped on Property. Just moved into our new office, which I'm absolutely loving. Touching the wooden wall. Got my little cute green sofa going on here, which is suede and feels super sexy underneath me. But in today's video, I want to talk about these 4 different personality types. Now, the first is the get-rich-quick investor. We all know them. The second is the retirement investor, which I can't personally relate to because I don't want to wait till I'm 70 to have a baseline level of financial freedom. Third is the financial freedom investor, which is more like myself and many of my clients that know you can't get rich quick, but also know that they don't want to wait 30 to 45 years to get financially free either. So they're creating a plan and a strategy to help get them there within the next 10 to 15 years. And then there's obviously the 4th type, which is the higher risk developer, which is effectively creating a job outside of their job for themselves and can obviously be very lucrative, but also extremely high risk. So this is based on my experience of buying over $200 million worth of property in the last 5 years for myself and my clients. I wish I had have known before I was getting started what type of bloody investor I was, because I think I went for a bit of the get rich quick, a bit of the I'll set myself up long term, a bit of the development, and now more recently, a lot of the working towards financial freedom. And because of that, I ended up with this sort of cluster of random properties that sort of were okay, sort of weren't best practice, that kind of were getting me to where I wanted to be, but not in the time frame that I wanted. If you're just getting started now, then this video will help explain who you want to be. And if you're like me, I've just bought my 13th property and had a whole mix of different things going on in my past, then, hopefully this video helps get you some clarity as well. So let's talk about the first one, and we won't spend too much time on this personality or this type of investor, but this is the get rich quick. Unfortunately, you bump into these people all the time, and I've got this big idea, I've got this thing that I've heard from this snake oil salesman, I've got this project that I'm gonna start, I'm going to this conference where the lady or the bloke on stage is telling me that I can get a 20% rental return, or I can do these chunk deals and make all of this cash, or I can go door knock, put together an option, and all of a sudden I've made 200 grand without doing any work. And from my experience, it's not that those things can't happen. It's just that for the average person that has 3 to 5 hours a week to spend doing this, it's not going to happen. They don't have the skill set, they generally don't have the mindset, and they don't have the resources or the contacts to make it happen. Now, those types of people that jump into the stock market or the crypto market when it's bubbly and it's about to hit the top, that are chasing that project in that regional town, myself included in the past, that are heard from someone that they can make some short-term money, eyes light up, and it's like, let's go for it. And generally what I find, and I talk to at least one of these people every couple of weeks that book sessions with us, is when I talk to them years on, 5 years down the track, they're still no further along. One of my absolute favorite clients of all time, I'm obviously not going to mention their names, is this type of investor. And in the last 5 years, I've seen them jump from training to options to renovating for profit to developing to putting their money into a caravan site to doing some single income, some dual income stuff, and selling their principal place of residence. And I absolutely love these people, but they are no closer to getting where they wanted to be. And had they have just applied a super simple buy quality value property with the intention to pay it off over the next 10 years, they'd be half of their way there now, but they're still following the slippery people and trying to make the quick buck. And it's just so sad to see because they're such good people and all they want is choices, but the choices they're making keep taking them further away from where they ultimately want to be. The second type of investor is very different. That is the super low risk investor. I'd like to say like my mum and dad, but neither of them have actually invested in any properties to this day still. So they're more in another category, which is we'll just buy our own home and hope that everything works out in the future with our savings, our super and the pension. But this other category of investor is the retirement investor. Absolutely nothing is wrong with this strategy. It is the slow and steady approach to accumulating a very small number of properties, maybe their own home plus 1 or 2 investments, and then to just slog it out for the next 30 to 45 years, if not 50 years, and just wait until they've finally paid it off so that they can have a baseline level of financial freedom. Now, again, this strategy absolutely works. It's extremely conservative and I've got massive respect for people like my father-in-law who have been going through their property investment journey in this way. But when I look at those people, I don't want to have to work in a job that I may or may not love for the next 40 years so that I can have $1,000 or $1,500 a week of income in retirement. That's just not for me personally. So, there's a lot of people that almost every single person in the baby boomer generation has taken this approach through very slowly and safely investing in stocks and 1 or 2 properties, and all of them will end up financially free, but they've had to trade such a big part of not just their life, but their personality and everything that's important to them to continue to work in roles that they may or may not have enjoyed doing. For me, I'm not chasing the get rich quick because I know for me it's not achievable, or I'm not prepared to put in the time it takes to do that very active strategy. And I'm not the retirement investor either, because the thought of waiting till I'm 70 to live my best life just cuts me up inside. I know there's plenty of you watching this that might disagree, and that is completely cool. My job is to explain my position and the different options, and your job is to take it obviously with a grain of salt and decide what's best for you. Now, the third type of investor, which I didn't know I was, but I always wanted to be, and only really started doing this 3 years ago. So I was already 7 years into my journey before I realized what type of investor I actually wanted to be, which, if I could have spoke to myself back then, I'd probably be in a much better position. In fact, I know I would be, because I just would have bought 2 or 3 houses in Sydney in the southern beaches and northern beaches back in 2011, and I would have added granny flats to them, and right now I'd be worth $4.5–5 million with 150 grand a year of passive income. But we live and we learn, and that's the thing about this. You've just got to roll with the punches. You're not going to have all of the things that you need to know right now. It's going to take time to get to where you want to be. So, if you are in a position where you have a plan and you know where you want to be, then all you're waiting for is time for that plan to work out. If you're in a position where where you want to be without a plan, then it's very easy to get sucked into these different investment categories, because anytime the wind blows, it will blow you off path, which I think is why it's so important to know where you are and what's next, and know where you want to be in the future. And for those of you that want to talk about that with me or my brother Simon, jump over to the website www.pumpedonproperty.com. Now, unfortunately, fortunately for us, a lot of people are coming across to book those sessions in now. So they are really designed for people that are thinking about buying in the next 3 to 12 months, that have at least $60,000 of cash or equity in the bank and can potentially borrow money to buy a place. I'd love to be able to connect with all of you, but with these videos hitting like 35, 40,000 people a month now, it's just so difficult to have all of those convos with people that aren't seriously thinking about working with us. The third category is the financial freedom investor. Now, for anyone that's seen Warren Buffett's HBO documentary on YouTube, and if you haven't, absolutely go watch it tonight. It is amazing. He talks about his approach, which is value investing. That's the same approach that I take to investing in property. It's a lower risk, higher return strategy, which looks at quality investments with great cash flow, as well as great potential to add value and great potential for capital growth long term. It is also a tax effective strategy, so that obviously instead of paying heaps of tax money, I then get that to help pay off my debt faster or invest in other assets. Now, the value investment approach to property investing in Australia is about following those fundamentals. And from my experience, this strategy, if you want to be very aggressive, takes about 10 years if you're starting off in a good financial position, if not 15 years if you're starting off in an okay financial position. The trick to this strategy is starting with the right plan, knowing exactly where you want to be, and then identifying each step before you take any steps, and then just moving and focusing on one little piece at a time. The fundamentals of investing in Australia, from my perspective, again, take them with a grain of salt, is following what's worked in history. If you think about timing being the first fundamental, what I'm talking about here is going and buying a property in Sydney in 2011. That would have been an incredible time to buy after a 9-year flat period. Or buying Brisbane in 2018 through to 2023, 2024, or buying Melbourne in 2011. Now, a beautiful time if you wanted to exit out of Sydney or Melbourne was back in 2016, start of 2017 is when I was selling all of my properties personally in New South Wales. And as you can see, between then and now, there has been a zero return when you look at the ups and downs in that market. And it is still very, very bubbly and very, very expensive compared to incomes, especially without the international investors, students, and travelers. So for me, I'm always looking at timing. Now, if you're interested in this timing stuff, check out Fred Harrison's work, check out Ray Dalio's work, check out Phil Anderson's work. I'm partnering with Phil Anderson at the moment, which is absolutely amazing. And I just heard, which was just like spooky, that Fred Harrison has been starting to watch some of our content over there in London or England, which is absolutely insane. He was talking to Phil and he said to Phil, who are these young guys wearing singlets and tank tops talking about my book? Thanks guys, appreciate the backhanded compliments, but it's good that we can bring different types of ideas to the market. Now, why it's important to know your history is that when you understand enough about history, you begin to see patterns in the present and patterns that could potentially unfold in the future, and it's remembering your past. So that's as probably much as I'll talk about that in today's video, because I don't want to go down the full timing wormhole, but timing is something that you can learn how to do, and all of the best investors in the world follow timing. You've heard guys like Warren Buffett talk about buying when others are fearful, and that's exactly what they're referring to, just timing markets better so that you're not paying top dollar, you're paying a good amount of money for a great quality asset at the right time. Now, the second one that I think is a fundamental in Australia is long-term capital growth. You get that from buying metro markets, from buying houses on big blocks of land close to the city in great school districts with great infrastructure. Now, for me, knowing that the Australian Bureau of Statistics has made it very clear that I think they said 75 to 80% of Australia's population, job and income growth is going to come on the eastern seaboard between Sydney, Melbourne and southeast Queensland in the next 10 to 20 years. I'm not going to roll the dice outside of those markets personally, because that becomes gambling and hoping that somewhere else is going to work. And as you've seen, other areas will work short term, but long term, the fundamentals make sense for the big markets, and that's what's worked globally as well. And then the third fundamental that I'm always looking for is a property with strong cash flow. If you look at my portfolio now, I've moved away from just single income homes in great areas to great properties in great areas with 2 incomes rather than 1. Now, that could be through a tiny home. Other people call them granny flats, auxiliary units, secondary units, ancillary units. Whatever you want to call them, 2 incomes can be very, very helpful, because it means I don't have to invest as much capital to get the same return on investment, which means if I'm earning $100,000 a year and I can pay $50,000 off my properties per year, if I've got a lower debt but a higher income, it takes less years to transfer that money that I'm earning through my active job or business into that passive property portfolio. And that's why, for me personally, dual income is the way that I'll be structuring my portfolio moving forward. The fourth fundamental for me is I like to buy properties at the right time with the right long-term potential and the right cash flow, but also something that I can do to add value to them. That could be as simple as adding a bedroom, a bathroom, a renovation. It could be buying a cheap piece of land at the right price and then building a quality home and making some money that way. It could even be through something more sophisticated like a subdivision or a dual occupancy site. But that's me. I'm a very, very active investor. My wife being an interior designer, my brother-in-laws both being builders, a lot of mates of mine being tradies, just helps with making that happen. And I like to get my hands dirty, not so much personally anymore, because my wife's like, you devalue every one of the properties that you touch personally, but by earning money in my business and then paying other people to help me with that. And, unfortunately, I like to go down there and micromanage them as well. I don't like to admit that, but I like to be on site. I like to be that annoying guy that's asking questions and having a laugh and noticing things and, just seeing it all coming together. Like, that's the creative part about property. This financial freedom investor really starts with a good quality plan, a great idea of where they want to be or a vision, and then they start systematically and slowly working towards that over time. Now, we've talked about that in other videos, like the 2 properties to financial freedom, which you can see in the link above or below, but there's different ideas. Now, the 4th and final type of investor from my perspective is, and I've got a lot of friends in this category, is the developer. This might be a builder, a town planner, an engineer, or just a punter like myself that is going out there and trying to make shorter term money. Now, a lot of people go into development because they want to create an income outside of their job. So many Australian investors have this idea of becoming a full-time investor, and generally to do that, you have to create chunks of cash very quickly, which puts you in the development hat. Now, that could mean buying your own home once every 5 years, doing it up beautifully and selling it for a profit, or it could mean things like renovations for profit, flipping. Cherie Barber talks about a lot like that with her courses. It could be subdivisions, townhouses. It could be something bigger than that. Some of the people that I know up here in Brisbane develop like 300, 400 sites per year, which is insane. What I did hear is that over a 30-year period, 98% of developers end up going bust. I've done some subdivisions. I've built like 7 or 8 properties now as well. I've seen so many clients and so many people I've talked to go into this space. I've now realized, which is beautiful for me, that I don't want to be a developer. But I do have 2 mentors of mine and 2 friends that develop, and my intention moving forward is that rather than trying to go out there and start a whole new business and learn a whole new skill set, I'm just going to stay in my lane, which is the financial freedom investor, and then I might give a small percentage of my income to these developers, and they can invest that money in their own projects and give me a guaranteed return. I might be able to get a 15 to 20% return in a year from these developers, and I leverage off their skills, their knowledge, and their expertise. And you might be able to find something similar if you don't want to rush out there and learn this stuff. Or maybe you're super handy. Maybe you know all this stuff and development is perfect for you. Maybe you hate your job and development's an option to get out there and do it. But, it's important to understand that regardless of if you're trying to get rich quick, working towards retirement, you're working towards financial freedom, or you want to be a developer, that we're all working towards the same thing, and that is, I believe, choices in our life and financial freedom so that we can be the best version of ourselves. We can live our best life. We can spend more time with our family and our friends. We can spend more time training. We can start businesses. We can volunteer. We can travel. We can not stress out in markets like the coronavirus or a GFC when they come through once every 7 to 10 years because you're worrying about being fired. If you're not enjoying what you do, you can cut back to 4 days a week or 3 days a week and you can live your best life. So over here at Pumped on Property, that's what we're all about. We want to educate you so that you can make great decisions on your own. And we want to work with a very small number of you each month to help you buy and set up a strategy that will get you financially free over time. We wish you all the best. Please subscribe to this video. Please give us a review if you're listening to it on the podcast. Please give it a thumbs up or some love wherever you are. We wish you all the best, and as always, stay safe. Cannot wait to catch up with you again soon.